Welcome to TradeTheNBA.com. This is John. This report is for the 15th of May. And as I was talking about before, with this rising steel situation that we were looking at early on at the beginning, the expectation of a pushback up to that 50% was not unexpected at all. Yes, we're still within the continuation of this downturn. Orange is still stuck right in the middle there. But that doesn't mean that you're not going to get these little popbacks, particularly within any extended short. And that's, remember, we're starting from all the way up at the ABM yellow back up here in the 2900 range. So that we've had a little teeny pop within this broader cell configuration. Not that abnormal. You can still see that we're still a long way from anything protectively healthy or that's likely to sustain. In fact, if it does, it would be quite surprising to just see a major dip from the orange. So while you got some short covering, I wouldn't say it was substantial. This would be a normal situation where people would just want to turn around and buy within that construct, but still overall we're looking at some general weakness. We'll look at that more closely in the 5K charts and that. Same thing with the NASDAQ. This is not something that you're expecting to be a strong turnaround. Doesn't mean you can't get a decent pop that will come back, halfway of this dip before trailing again. That would be what you would call your ABC decline, just the opposite of what you would look for from a move up. As again, we talked about the weakness that was built into this euro setup, and no surprise that we're moving right back down to the 23% line. No real shock with that. That was sort of, it's always amazing to me that some people have difficulty with some of these kinds of trades, but there's always going to be fluctuation. Even within a short signal, you can still end up with a pop that will go against the general move just because there's latent buys that will cover, and they're looking for that last little hurrah. Plus, from my standpoint, when you get some of those pops, when you know you have a short signal, become great opportunities to capture really extra gains. It's worthwhile. The gold, within this case, you can see, had the beginnings of a real strong move. Unless the steel crosses back below that sign, still may have a little bit more to support, but that's kind of weak, seeing the midterm buyer fail out off the pop, but it was a significant little move that it took place. So if we turn to our 5K chart, we had the buy from back over here, and I highlighted this area because I think this is an important distinction when we want to talk about, you get a nice move like this going, and the tendency would be to want to attack any DOC spread that shows up, which by referring to that, I'm talking about that cyan above red and the red rolling over. In this particular case, clearly not as attractive with the red well above zero. When you get to the lower peak right here, you might be certainly much more interested, particularly as you're just about to head below the line. The difference is that all it did was consolidate in this particular spot, and that's because you had an early turnaround of the green in this particular case, and it was still a short within this brief area. It just didn't produce much. You ended up with a downdraft that took you towards the 61, and that immediately got bought back up pretty swiftly, and that was indicated like really right there. That's going to happen in some of the short-term runs, and then when we made that move all the way back up to the peak, and it started to roll down again, problem here being, again, you have a complete reset of your steel. If your steel was maintaining like it did during the big drop, even on the reset where you'd end up with the crossovers, the steel would still be above. And that usually lets you know that that's less attractive. Where it became really interesting is when we ended up with the much lower shakeout reading, started right here, but you still had magenta near that plus 15 line, and particularly rising is always something to be cognizant of. I'm liking it when we get plateauing or falling. And that begins right here, as you can see, the cascade lower, but you're back up to your highs and you're just not producing anything from a histogram. So this becomes an extraordinarily attractive one. Dips down pretty quick, and you get that strong little turnaround from the crossover right here, which could be of a concern. and then literally any doubt that you had about it, if you were playing it from a conservative standpoint, when the spider was created right here, you knew that that was going to head much lower. It can get a little complicated within that kind of setup, but once I'm short from this period and I'm looking at that, this is what we've talked about before, between that 176% Morganashi lines, I've got to stop above the 100%. It's got to make the new high in order to really cause you to be concerned about, particularly when you've got a situation where your red is completely collapsed from above zero all the way below that negative 7.5. It's got to get back up to where it was, otherwise usually you end up with continued weakness. Now in this particular case it's supported, and then you started to make higher red pivots. That took place right about there where your X's start in. And even though it retested back at the lows, and that you noticed that you were still having higher peaks and higher low troughs from red DOC, and shakeout goes positive. And so whether or not you cash out on the little pop and then re-enter, these become flexibilities with your trading preference and style, or whether just sticking with that buy and forcing it to make the full stop low. In this particular case, when you had the 28.30 down below, any entry that was down at the lower portions down here is nice, because you know that algo is your potential dip down point, so you can adjust risk to reward based on that. And that's why it's always important to have those key positive extreme levels as they pop up. In this particular case, we had them going, well, you had them all the way through here, and then even as far back as this, even though that one was filled earlier, the lowest ones were right back over here. Let me get right on that low for what was 33 range, which coincidentally represents exactly what that low dip right there is. So it kind of fills it. I did want to talk about 50K, because there's a good question about this similar concept when looking at the broader move. Okay, so from the Power Mo standpoint, bought the setup, and then you end up with a nice rise, and it's like, well, okay, I've got 20 plus points. How do I either ride with that or take my gains and move? And you end up with this DOC spread that takes place right here. The difficulty you've got with the idea that this could be a more extended short off of this DOC, a couple of factors right here, particularly it's clearly shown in the shakeout. You're still with the magenta over 15. So you know that there's still strong momentum within this broader move. The secondary factor is, when we talked about this with the gold a little while back, and it's worth revisiting again, I'm looking for a short construct when that azure line meets the gold is usually when I'm thinking about, okay, I've got a fall off period. Do I have my short signals developing at that particular point? And it's a little premature right at that spot, but it doesn't take but one more bar before you see the separation back of gold continuing to rise and the azure falling off. When I see that azure starting to rise again, it's a warning. And in this particular case, it gives you several large bars in order to recognize that that has not going to result in a breakdown, particularly since you already had the steel reset. At that point, you know that you're going to probably get your turnaround once you get that steel crossover. In this particular case, we've almost got it now, the steel completely above. But that rising gold certainly becomes a factor in this. Now, the fact that we are below the negative, the positive 15 from the magenta sign, meaning, hey, if I make a higher high here and still end up with that as a lower overall shakeout reading in that, this next peak may be the one. So whether you got out at this one, it may end up with a little bit of the rise back here to come back down. But the point is, the deal campaign 2 is recognizing this more as a continuation because of this setup and that rising gold, and isn't likely to take out that trade so early. This becomes are you an active or less active participant in the trading? Because an active participant early on would have shorted right at that 50%, or at least exited and can have a return buy on a move back to it, and or begin to trail down because the ABM is slightly below that, and that becomes, once you move down to the lower range, certainly using that ABM as a pivot point going in between there. And then as soon as obviously the shakeout rose right in this bar as you cross back above it, but even below the 50%. So that becomes very subjective as to how active you want to be within the trade setup, because there is nothing wrong with selling on that DOC spread, especially when you had your initial warning on the bar before above the 50%, locking in some gains there, but also being prepared to re-enter into that setup as a new trade. Someone who's looking at it from a much broader standpoint, having captured the entry down from the lows, literally can let it ride with a little bit more latitude and wait for an actual red candle development, or in this particular case, a divergence where you're ending up making a higher high on a lower shakeout situation that would clearly indicate that things are about to break down in a more meaningful way. I'm sort of on the side, I'd never object to taking those gains when you start to see it. So if we break back to that 5K chart, you begin to look at it and say, okay, I'm starting to see a series of breakdown moves. Let me go to my 50K and see if I have a corresponding setup going with that, or starting to. In that particular case, you were looking at the meeting of the Azure and Gold right up at that secondary peak coming along, and that made that third bar, which translates to on the let me put that 5K back up. On the 5K, right over here to the lower highs of the shakeout, and the DOC spread developing from there, and that led to the downward move just to fill in the positive extremes, which again gives a perfect target, because I know also if I'm getting a short signal and I'm heading towards the fill of my positive extreme, you're going to have to do that before there's a decent range. Now, what I would love to have seen in this particular case is either the gold either going completely flat with the Azure, or them starting to roll over and turn the other direction, because that usually gives you your broader signal that you're going to capture a much deeper decline. In this particular case, it's by the time you actually get the DOC, it's exactly the opposite of that reading. And even in the next bar, if it were going to continue, you would have had more of a rollover on it as well. And so even if you decided to short anywhere along there, the break of the ABM, or even up at the 50%, you have plenty of time in between. Even at the close, you still end up making a move lower in both cases. So it's like, okay, it went against me, but though it still dipped down and gave you that opportunity to clear any idea of a short and be able to turn around. So that was a great question on the Skype chat. It was worth watching. If you have more of those, certainly put them up there. It's always worth talking about those, because these are interesting setups that develop within it, but we can clearly see where the general perception is. And what I mean that by the algos, because it is dynamic, and sometimes people forget, just because a high is made doesn't mean that there isn't new supply of money comes in at certain points, and this is the fluid nature of markets. It can change within that. That could have begun a broader sell if we'd seen that rollover in that, but that's not what occurred from the readings, and that just give a broader indication. So I would rather be a little late in some signals, but when I know that I've got these lower configurations and I'm up near 100% move, it really makes it easier. I know sometimes it's tough to pull the trigger on that when you're up near the highs, because it looks like it could just continue forever. But there are easy ways for us to evaluate whether that's taking place, because even if you shorted back over on this one, coming through here, you're above zero, so you already know there's going to be the potential for a bounce back. It makes the nice move. You're just then watching for that turnaround play, but as soon as the green fails to cross the sign at this particular point, it's certainly something I would be sticking with at that point, and then it confirms it when they separate strongly right there. And even with that bounce back, this is one of those things, sort of like what we're experiencing right now from the daily, where, yeah, fine, you get a little bit of pushback. It just doesn't have enough to go all the way. And this is where your entry becomes very helpful, because if you're up near this level, you're not really worried as much about that peak. You're just like seeing the green disappear a little bit in that. But not a significant enough turnaround. You notice the shakeout never went positive either, which is another way to help within a 5K, knowing that it's not going to turn around. So I ran a little long on this one, but those are a great thing to cover. So as always, though, I will update anything as it's relevant. Trade well.